Morning. Dion will present the slide. Dion.
Hi, good morning, everyone. Morning. Welcome back to the Women's Financial Inclusion Workshop. So today we're at day 4 and our topic is data analysis and collection methodologies, and we'll also be covering product design and development. But before we begin, I know it's been a wet morning, so we're giving everybody else about 5 minutes before the presentation, which will be done by Mr. Marlon Neal. But we ask in the meantime if you could please use the QR code and scan and just sign the attendance sheet. And there's coffee and tea at the back, so you could settle in. So 5 minutes, and then we'll begin with the presentation by Mr. Neal.
Yes.
Department of Youth Services. Flexible driver's license with some of the difference. I just see it.
checking that out.
So, as mentioned, today we'll be looking at data and product design. We've been introduced and we've covered what women's financial inclusion is, and we look at the constraint, both on the demand and the supply side. And so for the next 2 days, it'll be a bit more practical. Now that we've identified these constraints and we've had these discussions, how do we, what do we do with the data? What is the importance of this? And then tomorrow we'll be looking at the implementation, but for today, Mr. Neil will be looking at data and product design. And then instead of panel discussion, today we'll have a speaker, Dr. Sherry Smiling Craig, who will be doing a presentation on the regulatory environment from Central Bank of Belize. So with that, I welcome Mr. Neil.
Hello? I don't know why I favor this side of the room, but I'm left-handed, so maybe that's why. Good morning, everybody. Good morning once again. Day 4, before we get, I'm asking if there are any takeaways, insights, anything that really stood out from yesterday, anything that you think that we ought to have dove a little bit deeper into, general thoughts. Well, on my end, there are 2, I would say not oversights, but more insights just in terms of when we're looking at data, and a little caution as we move ahead. The first is, when I spoke about the enabling environment, I looked at the macroeconomic environment. I spoke about the way that banks are structured in Belize in terms of the type of loans they give, the requirements in terms of collateral, the fact that they don't focus on microfinance loans. What I failed then to mention and to give credit to is to Atlantic Bank, who took the lead and actually focuses on microfinance loans, and you have a program specifically for that, don't you? Okay, you should have stopped me yesterday because you need to advocate for yourself, and I was, casting a blanket over the entire banking system, but I am now correcting myself and saying that you do have a microfinance program. that focuses on SMEs. Was that in partnership with IDB? Can you share a little bit about that, please?
So we are in partnership with the IDB to do financing for micro, small, and medium enterprise businesses. But aside from that, Atlantic Bank has its own funding that we have designated to assist businesses who falls under this, the micro, small, and medium enterprise. And we have been, most recently, we've been actively promoting this and going out to meet with customers. We've partnered with Beltrade to get referrals from them. And we've been calling customers, going out to see them to try and actively promote this product or this product that we've been offering to see how we can assist customers with financing. We've been a little bit lenient with collateral under this program because we want to see how we can assist customers as much as possible.
How did that program come about? What was the impetus for it? I mean, who within the organization said, look, this is an area that we need to focus on? Was it that the demand was coming in, or was this something that came from within the organization and observation? How did that work?
I can't really speak to that. Sorry. I know with the COVID pandemic, this was something that we really started to push it then because under the partnership with IDB, it's primarily focused at businesses that were affected by in the tourism and agricultural sector, right? However, we at Atlantic Bank have extended it to all sectors, so distributions, anybody who would require financing. So that is where it came from.
From those loans, even though there was less collateral required, do you see any problems or do you have any data on repayment? Is there any challenge in paying back the payments from these people that have less collateral?
So far, I don't think we've done a dive into that data as yet. I don't think we have any. Well, some of the customers who we've assisted under this program are customers who were struggling because of the pandemic or leading into the pandemic. So we put them under this program to reduce payments and try to help them as much as possible. So right now we don't have much people. I don't think we have much of those persons in delinquency at this time. But I can't say for certain what the data is. And I must say that I know this is women financial inclusion, but we haven't, it's not gender specific or biased, so it's across the board, all micro, small, and medium enterprises.
That's a very good question. Thank you. So there you go. I knew about the program. It just escaped me yesterday, and for that, thank you for bearing with me. Second insight, we talk about data, and what we look at today is exactly what do we do with the data, product design, and then we look at a case, because I think those are always illustrative to give us an idea of what it takes to collect the data, right? And to kind of help us to loosen our belt a little and know that we don't do everything in 1 or 2 years. In the case that we're looking at, it actually took them over a decade and they're still working on it. And after that decade or more of collection, now they're just looking at implementation. They did make some changes along the way, but now is when the implementation really starts because they do have a good time series, which is essential for intervention, as we'll see. So we look at that case. The second insight for me is data is available, maybe not at the sex disaggregated level, but data is available that we can start to maybe take us to another dimension in terms of our intervention. And I was speaking to Ms. Alfaro this morning, and she shared the same sentiment, and she told me that she was speaking to a colleague about the amount of data that they have that they share with regional partners for integration, but the data may be a bit underutilized, and that is within a lot of organizations as well. The data is there, And perhaps it's validated, but what do you do with it? Now, when we're talking about data analysis for our purposes today, we're scratching the surface because, you know, when we're talking about research, we're talking about a very scientific approach. People with their PhDs who go to the university to actually learn research methods and have all type of statistical and mathematical methods to kind of parse through data. My idea of data analysis, sort in Excel, look for trends, cumulative, average, mean, median, mode. That's not what we're talking about when we really get down to the surface of it. But for us, that's not necessary. You know, those people will talk about heteroscedasticity, leptokurtic, regression analysis, and all of those things, those escape us. Not necessary. Leave that to the expert. Which leads me to another point. Partnerships with SIB, with the universities, public and private, UB, Galen University is there, have other tertiary institutions. They have mathematicians, they have statisticians, they have people that can understand how to manipulate the data within your database. And sometimes it's as simple as signing some kind of legally binding agreement, confidentiality, so that your information is protected, and then they can work with members of your project team to kind of define the outputs, and given the data, they can tell you exactly what the data is saying. Because I think our analysis, my analysis at least of data, and I think I have a pretty good command of data analysis, is still very basic. It's not the type of data analysis perhaps that we'll encounter in other countries, or that is required to really draw some inferences from it, right? So I say that to say partnership with the universities, with tertiary level institutions that actually focus on that. And actually the SIB is actually a good resource. Now, I don't know what the bandwidth is for those organizations in terms of the personnel to actually get those things done, because they have their regular areas of responsibility as well. But I'm certain outreach, certainly at Galen, that is in our focus for the next couple of years, and I'm certain it is for the University of Belize. I see they've signed MOUs with different industry partners. So certainly that outreach is something that these organizations are willing to do. So that's the second insight on my end. Anything else before we get started? Yes.
Hi, good morning. I think because of this data part, and we know the importance and what Mr. Marlon said about the partnership, I think that is where we all have to come together, because for the past days I have heard so much assessment and data that we have. However, it is not shared. I think what we need to do is have a mechanism, the enabling environment, where we are working at the Sustainable Development Unit with SIB to try to collect data for the SDGs, which is directly related to what you're talking about here. So I'm thinking how we can, at the end of this workshop, have some kind of way forward in terms of partnerships. How do we get the data that is available, and find what is the data gap, what data needs to be collected, and to move forward. All the banks have some kind of information, other institutions here. So how do we move forward? Like a discussion, we said it the first day, we have a lot of good policies, but the implementation is what's lacking. So in terms of that, we need a partnership. How do we get the data that you all have and try to populate it into the portal that SIB actually has? So just to share that we need to have that plan crafted, I guess, at least here begin the discussion.
Indeed, that partnership, Dr. Perry, good morning. Hi, Ms. Diane. That partnership is integral, and also what is important is for us when it comes to the development of these time series and the systems that surround data capture is to have more of a long-term view. As you'll see in the case with Chile, it took them, from 1991 up to 2014, and 13 years in earnest of the collection of solid sex disaggregated data before before they can begin to make meaningful implementation. So, project design and execution is not something that will happen in 1, 3, or sometimes even 5 years. It takes a really long run view, but that partnership is critical as well. So thank you for that insight. All right, let's get into it. Data analysis and collection methodologies, right? And I like to start with a quote. This is from Her Majesty Queen Maxima of the Netherlands. To solve women's financial exclusion, our starting point should be data. And obviously we have opined on this over the last 3 days, and yesterday we kind of had the appreciation that to first identify what the problem actually is requires good data, and that problem identification usually is about 90% of the work to identify what the issue is, but the data is the starting point. Next slide, please. So the objectives then today, threefold. We look at best practices and methodologies for implementing interventions. And we'll scratch the surface here this morning, and in day 5, we dive a little bit deeper into that. Understand how to develop good indicators. There are some rules, some little tips and checklists that we can apply to develop good indicators. And then how to select measurement tools. We're faced with a cadre of different tools, quantitative, qualitative, that we can use to advance our goals. It's not one or the other. It's a combination of both. However, we can't do all of them. Go ahead. So key concepts, just to ensure that we're still talking the same language. When we're talking about demand side data, again, I mentioned that is data that comes from the consumers to the top, from individuals, households, enterprises, and that data set is important because it includes information of successful transactions, but it also includes information of failed transactions that you would not get from the supply side from the top. When we talk about supply side data, this is based on completed transactions. We're sitting in the FIs, in the banks, in the credit unions. The information that we have to work with is just the information that flows through our database. In other words, someone initiated a transaction, we followed through, we had our internal processes, and then it went through and it was closed at some point. That is the information that we're faced with. So again, we mentioned that this is complementary. We have the demand side data and the supply side data, and the challenge really is to bridge that data set to find the best methods for intervention. Sex disaggregated data, we've had this definition, this working definition from day 1. Group based on whether a person is a man or a woman, that's as per the definition of the United Nations 2015. And we said that the standardization is important so that we're talking the same language, we can measure it from one year to the next, from one agency to the other within a country and between countries as well. And the dimensions of measurement when we're talking about financial inclusion, access, usage, and quality. Now, what is the data saying as far as women's financial inclusion and the progress that we have made globally? From 2011 to 2019, in terms of economic participation, obviously there are still some gaps. The economic participation gender gap has closed by just 0.15 percentage points for every year from 2006 to 2019. But we mentioned yesterday, on the one side of risk, the other side is opportunity. And the opportunity in that regard is that gender parity. In other words, if the gender gap does close, what does that mean in terms of global output? Well, that means that an estimated $12 trillion would be added to GDP by 2025 if that gap is closed. In terms of wealth, when we looked at the example in the US, while women did influence 90% of household consumer decisions, so women have considerable influence in terms of the consumer economy. In terms of wealth within the US, women held about 27% of all wealth in the US. According to this report, women hold 40% of the world's wealth. With gender parity with that equality. Women's wealth management and business relationships were managed like men's. Financial service provider will see an additional $105 billion in revenue. So obviously there's a business case there. And as I mentioned yesterday, it would be good at some point to have, for example, the heads of the organizations, the Lyndon Giuseppes, the Filippo Alarios, the bankers, the Gregory Mejias, to actually sit in sensitization sessions so that they can appreciate and understand the business case for closing that gap and for serving that segment of society a little bit better. In terms of entrepreneurship, entrepreneurial activity for women globally is about 3/4 that of men. 231, but the opportunity is that 231 million women are starting or running new businesses around the world. From the panel discussion yesterday, Belize Bank mentioned that they have seen an uptick in women entrepreneurs since COVID-19. And that was echoed by some of the other panelists as well. And that's something we've heard anecdotally, and I'm certain that the regulators may have seen it. Atlantic Bank noted that increase as well. So if that gap were closed, 231 million women are starting business, and obviously the business case is that translates to increased economic activity and adds to the GDP. In terms of account access, usage, and digital channels, again, the gaps persist globally. The gender gap in terms of access in account ownership closed by just 1 percentage point in the last 7 years reported. And the opportunity is reaching global parity in checking and savings account could generate an estimated $15 billion in annual revenues. In terms of usage, if the gender gap is closed, women and women-owned enterprise having equal access to credit would generate an additional estimated $95 billion in interest and fees. And in terms of the enabling environment, we look at the fact that lending in Belize is still bank-dominated, is still bank-centric, and with bank borrowing comes certain requirements. Collateral requirements tend to not focus on the micro or the small loans. We also realize that there's a bias towards maybe the urban areas or the rural areas are perhaps underserved when it comes to credit. As well, we looked at the fact that the survey that PPF did on behalf of Beltrade demonstrated that women are not as confident approaching a financial institution as a man, according to the survey. As well, we noted that in terms of the availability of financing mechanisms and the different types of accounts within a banking institution, women were less familiar with them than their male counterparts, as per the survey conducted by PPF. In terms of digital channels, 165 million fewer women than men own a mobile phone in low and middle income countries. Banks that successfully use digital technologies could realize a profit upside of 40% or more, which in these times, very significant in any time, but particularly in times such as this when, there seems to be a general slowdown in the economy. People are in search of yield, in search of profits, and if you have the data, the sex disaggregated data to segment, if you have products that are developed to cater towards that segment, given the amount of influence they have women have in financial decisions, then it translates into a solid business. That in terms of painting a product pink to say that to actually cater to women, the DFC, which things. It's not enough to say that we're gender neutral, that we have a gender neutral. Are enough. Dress. It's a diagnostic tool. Just as the doctor diagnoses you, you take your car to the mechanic to get it diagnosed. It's a tool to help us to get an idea and an appreciation of what the problem is. And then it is a change driver. So those three coming together can lead to, and as we'll see in the case, intervention, performance tracking, sustainable strategies, and ultimately product development. And that's the business case FSPs need to appreciate, because when we're talking about inclusion from the bank's perspective, institutions, it always comes back to what's in it for me. You have to be able to make a business case because you're utilizing resources. You're utilizing financial resources, you're utilizing human resources, time and capital. So there has to be a very solid business case as to why you're using this effort to go after that segment. Now, anecdotally, we know that the value is there, but you need to be able to prove it. And that's where the data comes in when it comes to product development. Next slide, please. Any observations or insights so far? Anything that stands out? Any additions? All right. Now, Chile is considered, when it comes to gender and women inclusion, Chile is considered a paradox, particularly because of where they're located. You know, this area of the world, there's tend to be this machismo kind of perhaps attitude and front, but Chile is considered one of the leaders in the world in terms of sex disaggregated data. In fact, it began as far as 1991, and the initiative really under the leadership of their female president in 2001 grew new legs and was actually institutionalized within the government units. So gathering sex disaggregated data actually became one of the performance metrics for the different agencies, the employees within the different agencies in Chile. So it was something that the policymakers identified as being very, very important and of high priority, and so much so that it was a major performance indicator as far as the performance management of state employees within these organizations. So Chile's banking superintendent for financial institutions has been collecting and analyzing sex disaggregated data from its financial system for the last 14 years. The plan implementation was supported by targets for generating the data, which were directly tied to performance targets for government officials. So the focus of ministry's gender commitments from 2002 to 2004. This was the primary focus at first, and where their efforts ought to lie is in collecting sex disaggregated data. 52% of their focus and their efforts, their resources were targeted towards this. Second was women's participation in terms of programs and initiatives. 18% of their focus was towards gender perspective programs, 4% towards staff training, and 2% towards women-focused programs. Next slide. Now, I mentioned earlier that it's important that we take a long-run view in terms of how we collect and use this data. You know, we can't put all the pressure on the supply side and say, well, you need to do it now. It takes some time, as we mentioned yesterday, it does take some adjustments to our systems. Because while within the organization, you can start to capture this information, actually using the data is usually a different story. So in the case of Chile, as you can see, it took them 13, 14 years from starting the collection, the first report in 2001, where they started next with age range analysis, looking at the savings information, cross-table income, and then a natural progression. Chile has just now reached the point whereby they can make some very serious policy decisions as far as financial inclusion. That is not to say that along the way projects weren't implemented, as we'll see the results of some of those in this little mini case. However, it's a very long run view in terms of data collection and to actually make changes. Next slide. So then what does 14 years of sex disaggregated data tell us? Well, in the case of Chile, there's no gender gap in access to savings account. In terms of number of deposits, we see in 2002, men held 58% and women 42%. In 2014, that was evenly split at 50-50. Women lag behind, however, in terms of average deposits, and men's average balances increased at about 4.8% per annum, and the women's average balance increased by half. And we will see that 50% difference over time due to compounding translated into some significant difference from where it was in 2002 to where it now is in 2014. It went from being about close to 75 or 80% of average account balances that women had relative to men, but small differences over time compound. And when we look at 2014, if we were to take that same data set and perhaps forecast it another 7 years, it would have doubled if there's no intervention. So that is what the data is saying as far as Chile. And as I said, they're now in the position where they can implement some very serious initiatives. Go ahead. The gender gap is narrowing, however, in terms of borrowers, and I believe the DFC alluded to this yesterday, that what they're seeing in their portfolio is that women have actually better credit history and better repayment history than men in their portfolio. And the data from Chile does support that gender gap is narrowing in terms of the number of borrowers. Women only represent only 34% of total loans outstanding. However, they have better repayment rates in all years for which this data set was collected. And that's significant. So how do we go about collecting and using this financial inclusion data? Well, obviously, first we need to establish the objectives. In other words, what is the information that you want to know? And we need to take stock of any type of sex disaggregated data that might exist in the system so that we're not duplicating efforts. Second, then we really need to define the approach. Look at the demand and the supply side data indicators to really look at what data points are relevant and what is not relevant. So parse through exactly which data points you're aiming to get data on. We need to consult and sensitize. Consult with and sensitize stakeholders once you know what indicators you would like to collect and why. consider coordinating data collection with a wide variety of stakeholders. Again, we did a strategic management workshop a couple of weeks ago with a ministry with several units, and this is not unique to that particular ministry. We see it from time to time in different government agencies where everybody wants to be the aggregator and the analyzer of data. And as I mentioned earlier in the opening, when it comes to data analysis, we do have organizations that focus on research and statistical analysis, such as the central bank, such as the SIB, such as the public and private universities, that really, that is in their wheelhouse. But you would be surprised how many line ministries have their own data set, their own database, and their own statistical analysis. Or perhaps they do some rudimentary analysis of the information, and it really doesn't take us where we want to go. What we're talking about is really a scientific method to getting some insights from the data. It's not the statistical analysis that we're used to in Excel, just sorting and looking for trends. It goes much further than that, right? So consulting and sensitizing is very important on those partnerships with the public and the private sector. So you need to adapt systems. Saying that you're going to collect information is fine, but the question is the system really set up, one, to accommodate it? And two, if you do modify it, how malleable is it within the system? Can you do searches within searches? And what type of insights can you get from the system? Again, when it comes to that type of data analytics, that's an entirely different discipline than perhaps what we're used to when we analyze data. So then we collect and we analyze and use the data to ask ourselves, what does the data tell us about where there are constraints in women accessing or using specific financial products and services? And after we go through the cycle, then we can start to look at product development and implementation and actually intervention. The lion's share of the work is getting the data, parsing through the data, analyzing, getting insights, and then the intervention. Usually, because of the lack of data, we tend to just move to the implementation stage. And that's fine because something has to be done. And that's fine because we do recognize that there are gaps in the data. And we can't let perfection be the enemy of progress. As we saw in Chile, it took them 14 years to really get a good solid time series. That does not mean that we sit and wait for the central bank or another organization to have all the data sets that we need. Implementation is necessary in the meantime, right? So I'm not saying that we have everything in a perfect circle before we go into implementation, not at all. This is in an ideal world, and we don't live in an ideal world, but this is normally the flow of project implementation, right? Now, in terms of the indicator checklists, and there are 4, you need to determine how relevant the indicators are that we're trying to measure. Have indicators been selected and adapted based on participatory gender analysis? In other words, what is the basis for your selecting those indicators? Are indicators aligned with what can reasonably change over the period of the intervention? Or is it that they're indicators that have some type of outside influences that won't at all be impacted by the measure of your intervention? Then you would shelf those indicators as nice to have, but not necessary for your intervention. And then you don't waste time and resources in actually collecting that data at this point in time, because for the purposes of our intervention, it's not relevant. Also, effectiveness. Can existing indicators be effectively adapted rather than having to create new ones? The information might already exist, so we need to determine how, if at all, can that information be used. Next slide, please. Comparabilities are indicators aligned with commitments to the Sustainable Development Goals and other recognized measurement frameworks for financial inclusion and women's empowerment. Are indicators aligned with other projects capturing similar information? Segmentation. Do indicators reflect that women are not a homogeneous group? Can the target population be segmented using existing data? again, rather than duplicating efforts, whether or not you do have data that you can parse through that tells you or gives you inferences on what you're trying to figure out. Next slide, please. So selecting the right measurement tools, as I mentioned before, there's a large number of tools to choose from. There's qualitative tools, social big nets, role plays, games. There's quantitative tools such as surveys, which can be easier standardized and compared. So in terms of data collection and analysis, by taking proactive steps to collect and use sex disaggregated financial inclusion data, progress on closing the financial inclusion gender gap can be more accurately measured. However, collecting data is not the end, right? Collecting data is fine, but we do need to move into product development. There does need to be some level of intervention at the policy level. According to Women's World Banking, many financial service providers, and I think we saw this yesterday, miss the mark when it comes to serving women because their products and services are only superficially tailored to meet women's needs. In other words, what systems are there to actually support the programs that you're launching in terms of sensitization of staff, in terms of extended branch and bank hours to cater to the segment of the population if that's necessary, in terms of training, networking, events to actually reach the rural areas, the areas that are underserved, avoiding gender-neutral approaches, using gender segmentation during research and product design, and articulating a clear business case for this market are just some of the ways providers can avoid this trap. Now, in terms of the product development, it's important that we do a business model assessment. That is, look at our internal gender diversity. In other words, we're preaching inclusion, but in terms of the makeup of your staff, the makeup of your decision makers, the senior managers, the executives, and all the way up to the board of directors, how diverse are you to have the diversity of opinions and to actually push as a priority, not just because it's a good business case, but push as a priority women's financial inclusion. So communication and customer touch points. We saw yesterday from the insights from the study in Turkey that women, compared to men, the key insight was that relationships are important to women when it comes to financial services, much more so than men. We also noticed that women have a unique relationship with time relative to men. So in terms of your customer touch points, in terms of who women are approaching in the institution and whether your frontline staff is actually sensitized to what your policy is saying and the products that you're offering, you need to ensure that when you do your business model assessment, that those touch points, that those things actually are aligned with the policies and your goal of financial inclusion for women. Credit policy and appraisal processes. In the case of DFC, they do have a specific product for women entrepreneurs, and I would suspect with that would come special requirements in terms of the credit adjudication process to consider these loans, because they can't go through the same assessment process that regular loans go through, because one, they may not require the same level of collateral. Instead of being fixed collateral, it might be movable. Or also in terms of the history, you might not have the banking history that another customer might have. It might be that you operate your business on a cash basis, and therefore there has to be different considerations when it comes to the credit approval process. Product terms, again, that speaks to, for example, Ms. Natalie from the DFC gave the example when they developed their products for women, they had to also take into account motherhood. If a female entrepreneur has a child and has to be out for 3 months because of those duties, then that has to be somehow factored into that development loan as well, either through a principal moratorium, an interest moratorium, or both. In-house capacity to implement gender-focused practices. Again, that comes down to the training, how well your staff are actually equipped and trained to understand the issues and the nuances. And the frontline delivery model. You know, the executive level and at the board level might have as a priority women's financial inclusion, but when your staff attend the sensitization trainings, how much of what they're learning they actually integrate into their behavior? Or is it something that they feel that HR is just thrusting upon them and they have to attend, but they don't really follow through? It has to be something sincere and that the staff actually lives, and that will actually come through in terms of the interaction with women in business, right? So in terms of developing gender inclusive financial products, the objective, and these are just intervention ideas, the objective in this case, if you want to promote a friendlier environment for women customers, again, we mentioned that the research PPF did show that women are not as confident as men in approaching financial institutions. Train staff. Hire and train more female relationship managers. This is a different study than the Turkey study that highlighted that women prefer relationships when it comes to financial services. And in every study we're seeing, it's saying the same thing in terms of relationships. There's commonalities in terms of who the women actually interact with when they go into the financial service provider. Digital channels should be explored to increase distribution beyond branches. We spoke at length about this yesterday, about the rural areas. Simplify the approval process to reduce the number of visits to branches, again, because of the sphere of responsibilities sometimes of the women entrepreneurs. In particular, you want to minimize the amount of times that they have to go to the branches, or try to make it convenient. Open up the branch on a Saturday for to accommodate the women. Explore options on psychological or alternative collateral. We mentioned that yesterday, and we saw the case about the collateral registry in Colombia, whereby it was operational, but they really didn't have the templates to value movable objects. That was one. And the second is that Colombia didn't have the legislation to actually support lending to that demographic. So with those two changes, with the templates and with the legislation, they were able to unlock credit to women entrepreneurs. Simplify KYC requirements with the mobile wallets, and I believe National Bank also mentioned that and Believe Bank as well mentioned that they have reduced the amount of KYC documents that are required, or if you don't have a document such as the address, Ms. Agatha mentioned that they have 14 other, such as the utilities to confirm your physical address, they have 14 other document types that can substitute. But they do recognize as well that it's a lot in terms of the requirements to open an account. And I believe the digital wallets have made it easier for individuals to actually establish these virtual accounts without all the KYC requirements. And I believe that is for National Bank and the DigiWallet. Deliver non-financial services if that's the objective. Some intervention ideas includes training, providing exposure and network opportunities, ensure access to consultancy services. Objective, actively address women, focus on building a brand as a financial partner for women-owned businesses, catering to the full spectrum of their financial needs. Adapt your marketing strategies. Usually the way a product is marketed presents a greater obstacle than the specifics of the product itself. Revisiting this from the model branches, the key insights, as I mentioned before, that in this example, in this research, they identified 5 key insights: that women have a unique relationship with time because of the sphere of their responsibilities. Women are avid consumers of information and advice. Women are calculated risk takers, striving for a balance between risk and reward. And we highlighted this yesterday, that the new trend in finance right now, well, the buzzword is sustainability as well, it should be, but the new trend as well is impact investing, where you're investing for an impact above and beyond the financial returns. There's some social returns attached to it. Well, this study is about a decade old. That has been where women have been all along in terms of the balance between risk and reward. It's not just simply the financial reward, but it's more a social reward as well that they're interested in. Women do not like pink marketing. Well, there's not much to say about that. I think that is self-explanatory. I don't think anyone would like being pandered to. It has to be something sincere and genuine. And I think people can see through that. Women want to connect, and this is where the relationships come in, not only with their banks, but also to peers, potential customers, and suppliers, and the wider community. And I gave you the example yesterday of, in my case, for example, when it is that I need something done in the house, there's a number of individuals that I would call from time to time when time permits. For my wife, it's much different. If she knows someone, she feels comfortable with them, she trusts them, and they give the level of service, they do what they say they're going to do within a certain time frame, that's who she gets. For me, I get someone in there and I want them to start working. And perhaps I'm not thinking of those dimensions, but that's just perhaps me. It's a very simple example, but from where I sit, that's a difference in terms of decision making in my household at least. Now, product development, going beyond gender neutral. Many believe that financial products are gender neutral since they are open to both men and women, but we already identified through the little research we did that in terms of the level of comfort that you might have and the level of knowledge that you might have in terms of financial products and how the financial institutions operate, just saying that you're gender neutral or your product is gender neutral doesn't go far enough, all right? Next slide, please. Segment by gender. Listening to women is key to taking their needs into account during the design phase. Segmenting by gender in research makes this possible, as women are less likely to speak up or voice a different opinion during research sessions where men are also present. They often have different concerns than men. For example, they are cost conscious and may face issues of affordability and access that men don't. Developing the business case for women. Again, we spoke about this. If the data exists, we're employing resources and capital towards product development and perhaps marketing initiatives, designing new services. So you have to make a business case for forward-thinking institutions. They're beginning to recognize the potential of women's market as a business growth strategy. So to reap this reward, they will need to believe in gender-inclusive products as a smart business move and not just corporate social responsibility initiatives. Think digital. Mobile services are increasingly gaining traction in the financial inclusion space because they overcome physical and social barriers that traditional channels cannot. For instance, more women have access to and ownership of a mobile phone than a bank account in the country where this is from, obviously. Greater investment by companies in mobile banking infrastructure networks and business model translates to greater financial inclusion for women. Collaborate. Again, we have the regulator here to talk about financial inclusion. And as I mentioned, we have the public and private universities, tertiary level institutions. We also have SIB that can assist in terms of your data parsing, data gathering, actually putting together a methodology for collecting data and for giving insights on your portfolio or your products. Female representation, we spoke about this when we looked at the composition of the boards of directors and the female representation. Someone pointed out that while the board of directors of their institution has only about 2 women, when you look at the senior management and the executive level, women perhaps make up 60% of the workforce of the employees, so that makes a difference in terms of representation. Financial institutions could build and reinforce trust among women by recruiting female officers and agents to deliver financial services. The model of encouraging women to champion the cause of women's financial inclusion has proven successful as it facilitates a balance between technology and personal service, which is critical
since women could be unwilling and or unable to transact without human guidance. So the key takeaways, data collection can be used as a catalyst for action, diagnostic tool, and a change driver. However, collecting that data is not the end in and of itself. We need to be intentional and very sincere when it comes to product design, avoid the pink washing, and create financial products that with women in mind to make and not to make them superficial. So they need to be inviting to women. Thank you. Any questions or insights or takeaways?
Any questions or comments for Mr. Neal? If not, then thank you so much, Mr. Neal, for your presentation. Can we give him a round of applause, please? So right now we're going to move into the tea break. And after this, we have Dr. Sherry Smiling Craig, who'll be doing a presentation on the regulatory environment. So after the tea break, we'll have Dr. Craig up here doing her presentation. So there are snacks at the back, coffee and tea. So 20 minutes.
Alright,
Alright then, could just turn that off. on the screen.
thank you, Mrs. C's not on. Thank you, Mrs. Gongora.
Alright.
Oh, wow, so you want this one?
Yeah.
Yeah, just for you. Alright, so we're not ready, yet, right? We still have 10 minutes. Yeah. Bye. Listen, it's just like next month, and no, from CNN, they're doing something. Just what should I do? If I don't come up with one, I don't think we'll learn. Like I very much
Okay, I believe it's been 20 minutes. Right now we'll have a presentation by Dr. Sherry Smiling Craig, who is the manager of the Office of Strategy Management at the Central Bank of Belize. Dr. Smiling Craig joined the Central Bank 34 years ago, and she's performed in several senior positions over her tenure. She's the lead of the Financial Inclusion Strategy, and she's responsible for performing strategic governance, overseeing and executing the bank's operational and strategic programs and projects, developing and monitoring the enterprise risk management of programs, and of course other roles as well. Dr. Craig also lectures at Galen University and has served on various boards such as the Young Women's Christian Association for 14 years as the president for 3 consecutive years. So please join me in welcoming Dr. Sherry Smiling Craig as she gives her presentation.
Thank you so much for that welcome, and it is always our pleasure at the Central Bank to present on what we do, because you don't normally hear from us, right? Yes? No?
Yeah,
We don't normally, but we're doing great things. And when you hear from a central bank, normally it's because something is not happening right in the financial sector. But we can tell you that we're doing quite a bit. And every day, you'll see most of us work some long hours to get the work done. But yes, indeed, it is always our pleasure to share what we're doing and to assure you of our role in protecting the financial system and in progressing our economy. So let me start, and let me say that I think I have a whole lot of slides with a lot of information. It may be quite a bit. Stop me if you don't understand or if you'd like to go into a little more detail on anything that we're doing, okay? So please, let's be interactive as much as possible. All right, so let's see if this will work now. And it decided not to. Okay. All right. So what we want to do is to do the, let's please take over that presentation. We want to look at the role of the regulator. That's why I'm here today. We also want to look at our national financial inclusion strategy, the data infrastructure, and Marlo spoke, I suppose by Mr. Lee? Marlo spoke quite a bit. We go a long way back. We used to work together. Yeah, so he looked a lot at the data infrastructure, and we will continue to look at some of the data and look at the local context of data. I know it's very important to collect the data and to use the data appropriately. And then we look at some of the policy-related issues that we are currently doing, and we will look at how we're going to drive the way forward. And we'll do it together, okay? So let's look first at our role as a regulator. First, I'll look at some of the global initiatives. We did not stumble onto financial inclusion as a country. These are global initiatives that have been in progress since 2011 and has really escalated in the developing world in the last 5 to 10 years. So the United Nations, of course, has their global initiative for the Sustainable Development Goals. And these goals are no poverty. Imagine a world with no poverty. Zero hunger, good health and well-being, and gender equity. These are things the United Nations has been striving for, and globally a lot of countries are doing the same. There's also that highlight of productive employment, industry, innovation, infrastructure, keywords, and you've been hearing them over the last few days. So the World Bank itself has also been doing quite a bit. The World Bank has initiated financial inclusion strategies in many countries over the world. And they will tell you that of the 68 countries that are currently implementing financial inclusion strategies. 50 countries have the central bank leading those initiatives. So we didn't stumble into this at all. So the World Bank wants to also end extreme poverty and promote shared prosperity. We're also on board. Now, AFI, the Alliance for Financial Inclusion, wants to increase access and usage to quality financial services for the underserved in a sustainable and inclusive way. Anything jumps out at you? You've been hearing all these buzzwords over the last few days. So let's look at our domestic initiatives. We had the 2030 growth strategy, where we say economic resilience is important. We say we want to emphasize strengthening the institutional frameworks that exist. Okay, that's one of our government's initiatives since 2010. We also signed on to the United Nations Growth and Sustainable Development Strategy, where one of the critical success factors is attaining prosperity for all people. Imagine, we signed on to that. Now, from the central bank's perspective, our mandate includes, and these are just some of the highlights, includes promoting financial education. We want our people to know about the financial system. We want you to know about loans and savings and mortgages and investment and opportunities with using financial products and services. So we want education. We also want to promote financial consumer protection. Clearly, we advocate that you go to your financial institution if you have an issue, but if you can't get that issue solved, then you come to the central bank. We act as overseers and supervisors of the financial system, and that's Ms. Diane's role. She's the manager of the supervision department at the central bank, and they oversee the work of the commercial banks, the credit unions, and money lenders. We also support initiatives targeted at financially excluded population groups. And that's why we're here today to a large extent. We pursue price and financial stability. Now, if we have price stability, people are more inclined to save and invest. We also want to promote sound and efficient payment systems. The last time you may have heard from us, we were promoting the implementation of the national payment system, which is called the Automated Payments and Securities Settlement System, which the central bank implemented, owns, and operates. And that connects all the banks so that they can transfer payments among themselves. We also want to promote an inclusive economic growth and improvement of Belize's well-being. Yes.
Excuse me, coming back to the promotion of financial education. How exactly are you guys going about it? Are you just allowing the different financial institutions to educate the public, or are you doing it into schools and educating our younger generation? And is it done in a manner where even the layman on the street can understand information that is presented to them and how are you reaching the layman on the street?
It's a big question, yes, and thank you for it, because yes, I will discuss it a little further on, but I can say is that we have several initiatives. First of all, when it comes to the financial institutions, they are responsible for educating their customer base, right? When it comes to the education system per se, you will recall that in the primary school curriculum, financial concepts termed as financial literacy has been included already. And now it's a matter of rolling it out to all primary schools in our country, because we aim for 100% of our primary school children having financial education, understanding basic financial concepts. In fact, we want to go further. We want our preschoolers to be able to use a piggy bank, understand why and how to save and what are their needs and what are their wants, because when they go to the store with their parent, they want everything. So they have to start to understand how money is earned and how you save it to buy what you want. So we want to get that into the preschool curriculum and also into the high school curriculum. And we did an initiative recently with the upliftment program that the Ministry of Education has implemented for 4 Southside high schools to get students back into the classroom. And we did some basic financial training for the teachers. Actually, Galen University helped to facilitate that training on behalf of the Central Bank. So yes, there are initiatives that we're taking on, and we have also recently, we're in the process actually of going live with a new website. We know that a lot of our data that we were publishing was geared to the financial institutions, the statisticians, the economists. So we know we need to reach the public. So our new website will be more interactive, more people-friendly, more information that is easily understood by any John Q. public. So there are some initiatives that we have undertaken to ensure that we're educating as much as we can. And if you need more education, let us know. We will we will see how we can integrate into one of these programs. Okay, great. Good question, thanks. And you'll see that that's one of our pillars for financial inclusion development. So now let's look at the evidence. There is evidence all over the world that access to financial services can reduce poverty. And it can raise your income levels, promote economic growth. So that there's a whole myriad of evidence to support that. When people have a safe place to save money, as well as having access to credit, they are better able to manage financial risks. I won't go through each of these because there's quite a bit, but it also helps firms to innovate and grow when they have access to credit products that are meeting their individual needs. And of course, there's a lot of opportunity where we see that financial inclusion contributes to financial sector stability and integrity. There are challenges, clearly. Everything has a challenge, right? Once you are extending credit, and I heard Marlo speak to that, then we have to balance the risk of extending credit and getting payments in return, right? So there are higher risks in the credit arena. Many people don't have the documentation required. We're not a society that likes to create documents, have a good business plan, have a forecast of what we intend to achieve. So these are some of the things. You don't have your credit history, you don't have enough collateral. Whatever the case may be, that's a challenge for us, especially for small borrowers. And to meet the needs of our society, then we need to also look at the underserved population. We know that 50% approximately of us live in rural communities. And as the central bankers who are here with me will know that my favorite village is Halakte. Once we have internet financial services in Halakte, we'll be happy campers. Great. Where are you from? Digi. Okay. Well, we have been pushing Digi to do that. So we're glad because ICT infrastructure, the information and communication technology infrastructure, is very important. We have payment services that can be done on mobile devices, so we need to have access to internet services in these areas and expand financial services. So there is no single accepted definition of what financial inclusion is. I am sure every presenter may have used a different language unless they use the language that the central bank has in this document. If you didn't use that language, then I'm sure everybody came up with their own. But we will show you what is our national definition for financial inclusion. All right, so now today we're supposed to be speaking about women's financial inclusion. And women's financial inclusion must be responsive to socioeconomic and cultural factors. In Belize, unlike a lot of Latin America and the Caribbean, or Latin America in particular, women tend to lead quite a bit when it comes to understanding what they want. So we're not, and we go out and get it. We don't wait normally for the men folk to say we need. They will go out and get it to a large extent. And many of our households are led by women. So we are a little different from the norm in the region. And women financial inclusion occurs when women have effective access to a range of financial products and services that cater to their own business and household needs. Women's financial inclusion, when managed properly, can increase empowerment of women. I'm sure you all think that, right? If you have money to use how you need to invest in yourselves and your household's needs, then you feel empowered to do the world. So that's very important. But we know that women's empowerment have several different areas that it can be manifested in. It can increase bargaining power. It can help increase opportunities to earn more. And it can reduce your vulnerability when you know what your needs are and what your rights are when it comes to accessing financial services. And I put a note there, these are all key factors for economic empowerment, and they can also help to empower women broadly in any area, not just financial inclusiveness. So let's look at some of the gender barriers to women financial inclusion. And you heard about always there's the supply side and the demand side. The supply side is, of course, what the financial institutions are providing for you and how they provide it. And then the demand side is what you need as a woman. What are your needs? And we really look at it from both we're not really gender specific because it could also relate to men. And we're not excluding men. So the supply side constraints include things like collateral. Many times the house is not in the female's name. Many times the land is passed down to the males in the family. So there's always a challenge in getting collateral. There's also limited physical outreach, and typically banks don't go after women clients. We need to change that. Documentation requirements, your women, especially in rural communities, often lack documentation, be it their IDs and the utility bill is not in your name. I always tell women, put the utility bills, all the bills in your husband's name. But then when it comes now to knowing where you live, you have to get your husband to say, okay, she's still my wife, she lives with me, and then the bank will accept that, right? So we also know that there's, and Marlo alluded to this, the messages are not targeting women. When the financial institutions have products available, they're not really targeting women, although maybe they put a pink color on it. It's not as effective. They're not really tailored for women to a large extent. And we're changing that. We see DFC changing that. We see other institutions changing that. So we've come a long way. The physical infrastructure can be intimidating. There are many women who, especially rural communities, where they don't know how to use the financial services, online banking, or they don't have access to online banking. So, there are some challenges. On the demand side, women have lower incomes than men. They have lower levels of education generally, and that again is changing. Constraints on mobility. There's lack of access to mobile phones. So these are some general things in the global communities when it comes to barriers. I won't go through all of them. So now we noticed all of this data, all of this happening, and at the central bank, we are, as part of our mandate, financial stability is one that is very important to us. So the central bank decided that we needed some assistance in developing a national strategy for Belize. The first thing we did was to engage the World Bank, because the World Bank had their global initiative, as we first indicated. So we engaged the World Bank and we asked them, why develop a national financial inclusion strategy? So we said that they actually helped us to understand that it's not a naturally occurring phenomenon. Financial inclusion doesn't just happen. You have to make it happen. And so it required this deliberate and focused effort that may be addressed generally across the financial sector. Countries with financial inclusion that had this coordinating mechanism tended to have higher levels of success. So if you did it on your own, the chances of success would be low, but if you coordinated it, the chances would be higher. There's a wide range of stakeholders that need to be involved. It's not just the central bank, it's not just the commercial banks, it's not just the credit unions. It involves a large number of stakeholders, including higher ed. It included public sector agencies and private sector agencies. So financial inclusion is a relatively new concept when we started this initiative, and stakeholders benefit quite a bit from speaking the same language. Remember I said a challenge is we don't even know how to define financial inclusion. There's no one definition because it has to be tailored to your country's needs and your cultural factors. You can't just say, I'll adopt a global definition. It may not reach your people. So we needed to set ambitious but achievable targets. We needed to have that rally cry, and we started with that. We needed to get public sector involved. We needed to get the banks involved. We needed to get the education institutions involved. So we started that rallying cry. Listen, we need this. Our country needs this. So that's one of the reasons that we started on the development path. We also wanted to have a strategy where every individual could pick up that strategy and understand what are the priorities. So we had to decide on those priorities for our country and the role of each stakeholder. Remember now we're bringing together multiple sectoral partners in this initiative, from the business community to the public sector communities. And we did reach consensus on how to approach our local financial inclusion. So again, we first started at the central bank. We do everything in a very structured way. We always start by doing an assessment. Everything we assess. So it might take a little time, but we know the facts, we know the data, and we can interpret the data. So the first thing we did was to ask World Bank to help us to do a diagnostic of our country. What are our cultural needs? What are our policy needs? So again, supply and demand. We looked at supply and demand. So when we looked at supply, we saw that the markets were concentrated in urban areas, or rural communities don't have access to financial services. Sufficient, I should say, access to financial services. There's limited infrastructure, so we're glad DG is getting to Halakte. There's complex or inadequate financial services and products. The fine line, there are, go back, you need this, you need that, and it's quite it's a heavy load for the consumer in very many instances. And of course, high cost was cited as one of the reasons. From the products and services that were available, the cost was a little difficult for persons to use. And then there's always these contracts and the bottom line that you need to sign. So from the supply side, we saw those as challenges. Now, that really was compounded. All the supply side issues were compounded because there was no real, easy to use dispute resolution mechanism. If you have an issue with a bank, it usually ends up in, it takes a while to get it resolved and all of that. So we know that those were some challenges, and I can say that banks have committed to making this much easier for customers because they were party to this. Now, looking at the demand side, there's low financial capability, going back to the education issue. People don't know how to use financial products and services. There's poverty and informality in the system. I can tell you right now that among the regions of the world, Latin America and the Caribbean, it has the highest rate of using the informal financial system than any other region in the world. We like the syndicate and the, those informal ways of saving under the mattress, in the Milo tin, whatever the case may be, the informal financial system is very prevalent. There's also limited information on the demand side, and Marlo alluded to that. But we have started to collect quite a bit of data. Again, the World Bank helped us to create a survey instrument to get some disaggregated data on urban, rural, male, female, and some other factors. And so we've had 2 of those so far, and we're looking at those trends. And a big factor on the demand side that came out again and again is this lack of trust. I don't trust that my financial institution is doing what I need it to do. And that came out quite a bit. Then we also have low population density in rural areas. And then we do have geographic complexities. It's difficult to reach into some of the more mountainous and or island territories with ICT infrastructure. So these are all challenges that were identified in our assessment that the World Bank helped us to conduct. And all of these together led to having financially excluded or underserved population. And this study was done in 2018. So let's look a little bit deeper into our financial inclusion strategy, which was started in 2019. Our vision for our country. And as I said, we had 45 different stakeholders that came together and we agreed, this is our vision for our country. Every individual, and you just imagine this, if we had a Belize where every individual and enterprise is equipped to make full use of accessible, quality, and affordable financial services. That's our vision for our country. So we had to come up with a definition that we could all agree to. And the definition that we agreed on was For Belize, the financial inclusion meant the uptake and informed usage of a range of quality financial products and services by individuals and MSMEs, provided in a manner that is accessible and safe to the consumer, that's the demand side, and sustainable to the provider. So clearly we have to balance the two. The financial institutions play an extremely important role in our country. They provide credit and they allow us to save safely. So we can't just have them having products and services without it being a sustainable initiative for them also. So balancing is important. So always consider that. All right, so we developed our framework. At the top is the vision that we just spoke to. And then we have these lateral, or what we say, enabling pillars at the bottom. So our enablers, and you look at the base of your house, this is the foundation. If you don't have these, you can't achieve anything else. So at the bottom of our foundation, we say we need public and private sector commitment. We have to work together. We need a legal and regulatory environment to support financial products and services and the use of those. And like the central bank, the FIU, the FSC, and OSIP, Office of the Supervisor of Insurance and Private Pensions, we're regulatory agencies. We need to develop our capacity to ensure that the financial system is working correctly. And we need the infrastructure, we need the telecoms, we need the mobile and digital payment services. So those are enablers for us. Now, the drivers. We came up with 4 main pillars to drive financial inclusion. The first one, innovative distribution channels. Digi, Smart, whoever else, cable companies, whoever is providing the channels, we need that. We also need tailored financial products and services. And we at the central bank and our stakeholders agreed that even though there was not a great gender disparity, we needed financial products and services that serve the use of women, of individuals, for farmers, and for MSMEs. So those were our target populations that we identified back in 2019. Then financial education and capability. And we just don't say literacy. We say capability, education and capability. So you get the theory and you know how to apply it, right? And you apply it to serve your own needs. And then we look at financial consumer protection as one of the major driving pillars. All right, so this is our framework in a house, and we will achieve it.
Dr. Gray,
Yes.
question, in what form would the public and private sector commitment take? And is that where our awareness comes in, and how does that work? What is the form?
Okay. The form is what we have done is to divide ourselves into task forces. All right, so we could go through that. That's good. Okay, great. So I heard someone say when we walked in earlier that we have all these beautiful policies and they're not implemented. We take your point. So we developed into our strategy a monitoring and evaluation mechanism. So at the top, our policymakers are from the public sector, which is the norm in all jurisdictions. And right now, the governor of the central bank is acting in the role of chairing financial inclusion. So we want to develop a financial inclusion council. And because it should be at the highest levels, financial inclusion has to start at the highest levels in our country. The Office of the Prime Minister has to be represented on the council along with the Ministry of Finance, Economic Development and Investment, and the Central Bank, the Ministry of Education, and the Economic Development Council. So these are entities that have to be represented there. Then you will notice that blue Financial Inclusion Strategy Secretariat. That's where we come in. We have a secretariat at Central Bank, and as you know, we do everything in a structured way. We ensure, we coordinate, we push for the initiatives to be achieved. And we measure achievement and progress. And my colleague in the back, Jair, is part of that team. So, as Marlo asked, these are stakeholders that had committed to participating in this initiative. Development and investment, education, science and technology, FIU, EDC, DFC, human development. And then we have from the private sector, we have the Bankers Association, the Credit Union League, the Belize Chamber of Commerce, so these are public and private sector entities. And what we have done is divide ourselves into 4 task forces, basically along the lines of the enabling pillars and including the drivers and the enablers so that we can achieve the initiatives that we set out to achieve. And we at the Central Bank coordinate quarterly meetings of these task forces, and we get updates on what their initiatives are. Okay, so we have a monitoring mechanism and we track progress. So let's look at the data. And I can tell you these beautiful maps, the IDB helped us to use machine learning, small area estimation, modeling to know exactly which village or which area of our country has access to financial services, which has telecom, where there are, tell me another indicator, Jair. Point of sale access, ATM access. So we know geographically exactly what's happening in our entire country. And I'm sorry we didn't have more time to go through some of those. So we just, if anybody wants to know more about that, let's contact us, okay? All right, so let's look at some of the data. Financial inclusion indicators globally are measured in 3 ways. The access, usage, and quality. So the global indicators show, and the last publication from the World Bank was 2017. We just recently did the 2021 survey. We submitted our responses, and so we're hoping that that report is soon published. So if you notice here, in 2017, there were 1.7 billion people in the world that were unbanked. There are 1 billion adults that were unbanked that are now banked since then. And there are 34 partners who have committed to financial inclusion. And you could see that there has been progress. In 2011, when the initiative first started, there were 51% of the world unbanked. 2014, 62%, banked, I should say, and 69% in 2017. So we're hoping that figure goes up for 2021. Now, look at the gender gap globally. You will notice that women are overrepresented in the unbanked population. In the small dots mean 10% and below gap between males and females with accounts. And you'll notice those are in the more developed areas. The blue, of course, there's no significant gap. So the developed countries have no significant gap between male and female access to financial services. And then when you get down to 21 to 30% gap in transaction accounts and in financial access, you see that the more, or the developing countries are the ones who are struggling to get women included. So that's a global scene. Now let's look at our data. As I indicated, in 2019 and in 2021, we engaged the SIB to include a financial inclusion module in the labor force survey. The instrument was created for us by the World Bank, and it was tested, and the SIB staff was trained in how to apply the module. So we were happy for that, because data collection is a challenge for us here. All right, so if we look now at financial services on the supply side by district. This data is coming from the financial institutions and the sources of central bank. And this is the information that the financial institutions submit to the central bank, okay? You will notice that when it comes to access to financial services, of course, the Toledo district is represented by the dark blue, and they have very minimal access to financial services. When it comes to branches, there are 2 financial institutions in the Toledo district, in the town itself, right? And so these are the branches here. And if you notice, there are hardly any branches in the districts. And we understand, because it's very resource intensive to have brick and mortar branches in rural communities. Banks pay a hefty sum, and credit unions pay a hefty sum to maintain these institutions or branches. So we could understand why that is so. Now, ATMs, you see we're doing quite well in the urban areas. We have quite a lot of ATMs happening. Again, the rural communities are challenged. You don't see any for Corozal and for Orange Walk, and for Toledo, there are none in the rural communities. Oh, sorry, I should say Orange Walk and Corozal have 1 each, and Toledo has none. And when it comes to the point of sale, we're doing well. So we need that ICT infrastructure again, because these are ways to get financial access to our community. We need to reach the rural communities. So on the supply side, this data comes from our bank return and credit union returns, number 15. Now let's look at access. Deposit accounts by gender. Now we have this data that we collected from the same report by gender. And we will see that deposit accounts for the Belize district, very high. Not much difference between, no significant difference, although you will note that the women have more transaction accounts than the men in the Belize district. However, that trend does not hold for all the districts except for Orange Walk, where the women have more transaction accounts than men. When we look at debit cards, which is another form of access, you will note that, again, women tend to like the debit cards. Oops. In most of the data shows that, except for Sand Creek, where more men use debit cards than women. Interesting, right? So you see the cultural norms coming out by district, yeah. All right, so when we look at usage now, we see that account ownership on the demand side, these are now from the SIB survey and from the Global Findex data. The Global Findex had reported that women had more account ownership in Belize in 2014. That men have a slight edge, but it's not statistically significant, but men are opening more transaction accounts. Savings. And we have more data, I just pulled out some of them for you. Savings, who set aside money? In 2019, the women did, but what happened in 2021? They had to spend it to keep the households going, right? So they pulled out the savings from somewhere in 2021. And then, remember now I said that Latin America and the Caribbean tends to have the higher informal sector. This data was showing set aside money in a financial institution, in the formal sector. And this data is showing in the informal sector. And here we're saying that they had savings group for clubs or syndicate, or somebody from the family loan them money, or adults. So, you know, they were saving and getting money from these areas. Yes.
Would you have, with the sector, well, I guess you probably have data pre-COVID, because it would be good to understand what the trends were like pre-COVID, COVID, and now that we're in post-COVID, to understand that, you know, the impact of COVID on those factors.
Yeah, indeed, it would be good. Unfortunately, the disaggregated data sets weren't being collected prior. So we only have 2019 and 2020 data at this point that is disaggregated by gender. But definitely going forward, we will see some of the trends. And the data sets that we are showing here, we have had several institutions look at them to see that our methodology is correct. So, you know, we tested the data quite a bit before we ever share any of our data. But indeed, that is our hope, and unfortunately we didn't have. But we don't see clearly, anecdotally, that we can say that perhaps, we can conclude that perhaps they had to borrow or you know, or save the monies that they had saved that they were using. So when it comes to loans now, these are loans from a financial institution. And we will see that mostly the men tend to save a little more and borrow a little more. And again, from the informal sector, you will see that they borrowed also from the informal sector. All right, some other information is the quality of products and services. Financial services are too expensive. 10.13% said that in 2019, and it went up to 19% in 2021. They take too long, that number increased. They were charged a fee for a service that went lower, and fee not expected also went lower. So at least you see education happening here. The banks are saying, or the financial institutions are saying, this is the charge for this service, and people understand that. They don't have the necessary documentation, that went up. And they do not trust financial institutions, that also increased. And this data is from the labor force surveys every 2 years. All right, so we have our niche strategy. We have our monitoring mechanisms, and we had to come up with what are the actions that we would take over the 3-year period. Unfortunately, COVID really slowed our progress because we started off with a bang, and we had to slow as COVID got worse in our country and globally. But we're still continuing with the initiatives. So let's look at some of the opportunities that came from our assessment report. Innovation, we needed to innovate, that's an opportunity. And we needed to innovate to serve the underserved populations. We needed to ensure that Belizean women were served. And our evidence really suggested that account ownership was a little higher in 2014. Remember that there was a much higher number, but that did not stop our policymakers from saying we need to target women. And there's a lot of reason for that. There's a lot of evidence in the world that shows that when the woman manages the finances of a household, the household tends to be, the livelihood of that household tends to be at a higher level. And as I said, there are many studies. So despite positive evidence, Belizean authorities and private sector said we have to include women. Education and health were one of the major areas that people borrowed for education or for health purposes. Starting and operating or expanding a business was cited as a reason, but not as often as education and health. Access to housing loans were slightly higher in Belize than among our other counterparts. And Belizeans have a better understanding of inflation than a lot of the region. So that was good, right? You know how much your money can buy. And so that was a positive indicator, and it's something that we need to expand on. And financial consumers in Belize have access to a standard suite of products and services. So let's look at some of the actions that we're taking. When it comes to the coordination among stakeholders, we have our task force meetings, and we're in the process of drafting an annual report on progress since 2019. And when it comes to improved data collection, we continuously try to get more data. So we're acting on what we wanted for these areas in the public-private sector commitment area. Now, when it comes to the legal and regulatory, we have digital signature legislation enacted. That was one of the actions we wanted to pursue. We have that. We also have our oversight framework has been expanded tremendously in line with international best practices, and we got the World Bank again to help us to develop our framework. And we're right now in the process of having secondary legislation developed for operationalizing our National Payment System Act. And that will speak to things like using agents and outsourcing arrangements and those factors that could promote moving financial services to the rural communities. When it comes to the financial infrastructure, we know one of the big ones here that we want to do, we want to implement a national switch. And the reason we want it, it's not necessarily a switch, but a payments mechanism where your DigiCard can send payments to your eCash card wallet or whatever the case may be. We want interoperability. We want everybody to be able to connect, regardless of which payment service you take on or you subscribe to. We want you to be able to make payments across the spectrum.
Do you guys have a timeline for that?
Yes and no. We're in the concept stage, and once we have what it will take for our infrastructure, you'll see it is one of our objectives that we're working on. And as soon as we get a good concept note and do an assessment to see what needs to be done, then we will establish a timeline. And normally when we say a timeline, we achieve. Proud to be a central banker. So we're drafting that concept note. We're talking with the World Bank again, and because they helped us with our payment system development. And so this would be like a second phase of the payment system development. Right. And what we're working on, and you should soon see, is the shared services network going live. Now that's a network of credit unions being connected to apps or automated payment and settlement system, and that should come in the next month or two. We're at the final stages of user acceptance testing and pilot phase, and then we go live. The credit unions did a lot of work to achieve the technical and operational requirements that the central bank set in order, we are always concerned about having a safe and robust and efficient payments infrastructure. So they really came up to achieving those requirements. Another area that we have seen a lot of development is innovative distribution channels. We see now we have 3 digital wallets in production. We have the national payments regulations that, again, as I indicated earlier, will be laying out the requirements for use of agents, especially in rural communities. Another area when it comes to the tailored financial products, we see that we have programs that are targeting women. You spoke about the DFC program, and farmers are also another target population, and Beltrade is also working on some areas there. And we do have, at the central bank, we have drafted a simplified due diligence guideline. You spoke to that earlier, Marlo. And yes, we understand documentation is a challenge. And so we are in the final stages of developing a SDD, and we will then have to share that with and get some feedback from the financial institutions. But we need to standardize due diligence procedures. When it comes to the financial education, we have projects, as I indicated earlier, or initiatives and actions that are targeting primary, secondary, MSMEs, and women. We need more programs to reach rural communities, and we're working on that. And any institution, maybe a higher ed institution, may want to take on such an initiative, and in collaboration, of course. Then we have development and implementation of sector-specific education initiatives, which is happening. We know that some private organizations have contacted institutions like Galen University to provide training for their staff in financial concepts. So go back to your institutions and say, listen, I understand Galen has a 4-hour training. Let's get them in to help our staff to understand financial concepts. All of us have to play our part in understanding. So financial consumer protection, a biggie for us. We have already a draft legislation for financial consumer protection. We need to make a policy decision on how it will be implemented, and then we will start some consultations on that issue. And we did enact a deposit insurance law. So, for the central bank again, we use a theory of change in implementing projects like this. We have our actions, which you saw, I just went through. We have the outputs that we want from these actions, what it is that you must deliver. Then we have the outcomes, and we want to know the impact. So we are going to be constantly monitoring all the actions, all the activities by stakeholder groups to see how they are progressing. And we have indicators and targets that we want to reach, and we have some of them listed here. So by 2022, we want 80% of Belizeans to have a bank account or a credit union account, a transaction account. We also want 40% to be saving in a regulated financial institution, under the mattress, out of the Milo table, into the financial institution. Let your money work for you. We want MSMEs access to loans. We want adults who borrowed from the financial institutions in the past year to increase up to 20%. In 2019, it was at 17.3, and then we saw in 2021 it went down to 10.5. But clearly, COVID again, people were scared to borrow. Getting credit, we need that index to go up to 40, and of course that aligns with our credit reporting system that we hope will come on stream within the next year or so. We haven't really established a target for the cashless retail transactions. We're watching the market, collecting data to establish a target for that. And then the percentage of adults who receive digital payments, clearly we want that to go up. We said 65%. In 2019, we bettered that figure, but in 2021, people are less, they don't want to use digital payments, or they stop using digital payments because of concerns about the economy at the time. All right, so these are some other indicators. You will notice that here, percentage of children who receive financial education as part of their curriculum. We want all, and that is one of our big aims with working with the Ministry of Education. We don't have a 2021 data because, of course, schools were closed to a large extent or working remotely. So let's look at our reform agenda for the central bank. We want to reform more the payments infrastructure. We want to enact our financial consumer protection law, and we encourage consumers to self-protect. You have to know your own rights. The national payment system, we want to continue the implementation of the regulation, frame the quality of agent management. We can't have everybody being an agent, but you have to have criteria to become an agent because you're taking people's money. So we have to make sure that money is secure. Then we have to have the authorizing arrangements for outsourcing. You can't just outsource a service to anybody when you're doing financial services. You need to have approval for that. Simplified customer due diligence. We understand the barriers that are there and we're working to reduce those. We are looking at a tiered approach where if you only transact a minimum amount of money, then you don't need all documentation for opening an account. From the technological side, I spoke to most of these already. We want to implement this payments gateway that will allow our payment services that are currently in production to be interoperable so that you could cross payments platform into a new platform, into the other platform that you're making payments to. And we're exploring cross-border payments, direct debits, which is a means of supporting e-commerce we want to implement. And we're actually exploring a central bank digital currency. That is where we're studying it at this time. We know that 3 jurisdictions in the Caribbean have central bank digital currency. So we're looking at whether it is appropriate or applicable for us. And those are my sources. And now
You want the best for your family, you're a value to your community, but financially, you just can't get it right. And if you're aiming for prosperity, to achieve financial security, learn how to use your money, make your future bright.
In a financially inclusive country, every Billy citizen and micro, small, and medium business must know how to use a range of quality, affordable financial services, paving the way for a better, brighter future.
You must seize the opportunity to get financial security. So learn the system to make your future bright. Learn the system to make your future bright. You want the best for your family. You're a value to your community.
Hi. During your presentation, you said one of the goals was to increase the number of adults who are borrowing. But you also showed that, a percentage of adults are actually scared of borrowing loans. So what is, or they don't trust the bank, that's the term, trust the bank. So what is being done to restore customers' trust in the bank? Because I know, let's say I have to go and do kidney surgery, I have to remove my kidneys. I need a loan to do that. But how can I ensure that while I'm recovering, the bank doesn't come and takes my house? So what is being done to restore trust between customers and the banks?
Let me say that trust is only one factor, okay? It's only one factor. And remember too that we have to balance the risk of lending against the risk of your repaying. We have to weigh that. The financial institutions have really been doing quite a bit in educating the customer and getting information on the repayment capacity of that individual. So you have to ensure that when you are there, you ask the right questions before you sign on to any loan or anything like that. So quite a bit of us have a relationship. We've established a relationship with our financial institutions, and we heard earlier that women like that face-to-face service where they know who to go to speak and to be truthful about the situation. And that's what we could suggest. I don't know, Diane, would you like to add anything to that?
Definitely you would need to understand the type of loan that, you would be getting for that situation where you're saying, if it is that you're doing a surgery, perhaps there can be a moratorium on the principal and interest payment. Also, the central bank, encourages institutions to reduce interest rates because that would make it more affordable to the consumer. But those are things where you would need to know which institution to go to be able to get that type of service. So definitely knowing which institution would provide a more sustainable and economic facility for whatever the case may be. So that would be where you as the consumer know which institution to go to better serve your requirements.
And clearly you would have to have that relationship. They would have to know you as a customer to a large extent, So it depends on the situation. We encourage you though to speak with them, understand what you want, understand the requirements, and speak with them.
I'd just like to add to that, as a part of our MSME strategy, we've been going out and, like I mentioned before, and meeting with our customers. But it's not just to meet with the customers and offer this product, it's to build that relationship with them so that they know that they can trust in us, and they come to us if they're struggling, if they meet any kind of challenges, then they come to us and we find a way to help them through those challenges as well. So it's important to build that relationship with the customers. I just want to further add, there was a lot mentioned regarding rural and urban access. A part of the strategy for the MSME program that we have is to go out into those rural areas. So we've been as far as PG, Halapte, all of those areas, meeting with the farmers, female farmers, people who are planting vanilla and cocoa, all of these things, cacao, all of these things. If we have representation countrywide under this MSME program, So we have people in Corozal, people out west, down south, in Belize City. So we have somebody specialized in this area, and of course somebody who manages that program. And we go out and we meet with people all over. Another thing, we have a program called Atla Express, and the Atla Express is designed for people in those rural areas. So you might have opened your bank account with one of our branches, but the Atla Express is primarily targeted to the rural areas where you can go and transact. So you can go and withdraw from a business there that is an Atla Express agent. You can do your bill payments, school payments, all of these things you can do at the Atla Express, transfer to another account, transfer to someone else. So that is one of the products that Atlantic Bank is offering to reach people in the rural areas.
Great, that's good to hear.
And I know the example that you gave about money for kidney insurance is just illustrative, but life is real and those situations do present themselves. I think as consumers, a part of financial literacy and inclusion is understanding the different financial products that are available, not just necessarily through the banks, but insurance. And I know that, we might think as consumers insurance is very expensive if it's not something that's provided by your employers. But I think that's also an opportunity in the market for microinsurance and to serve those micro, small, and medium enterprises. But also as consumers to explore, and it might be a lot more affordable than you think it is and come in a lot more handy, right? So I know that the example is just illustrative, but those situations do occur. So I suspect you were talking about the co-payment portion that you're borrowing and not necessarily for the entire kidney surgery.
Yeah.
Thanks for that, Marlo. And yes, indeed, we could say that OSIP is working on legislation and a policy on microinsurance.
Hi, I just had a question. As it relates to the acquisition of Scotiabank, so customers moving over to Belize Bank, what has the central bank, what have you guys put in place to monitor that acquisition since it happened? Like what's the feedback? I know I had to move, not that I wanted to move, right? Migrated over to Belize Bank, and I've had some personal challenges with the bank. And I do understand the migration, because I come from a telecom background and we changed over our billing system a couple years back, and that really messed up people's account. But I just wanted to understand, as the regulator, where do you guys fit into that?
To another, and consumers educate. Then you contact the financial institution, get the information, so that at the onset, go to or you feel aggrieved, make a complaint to the central bank. And they had to submit a plan, and they implement. There were some challenges and a natural, occurrence to have challenges. There will be a advocating with them so that you can get them. Did oversee the implementation of a transition plan. We're here for.
know, central bank are regulated in digital currency and decentralized finance. You know, Bitcoin a digital currency, they're legal. And it's decentralized and populations to become part of the financial.
Talking are not looking at that. We are really happens because there are grave challenges, unregulated market spaces. You go in at your own risk. $0 today and $0 tomorrow. So to implement as such. Countries who have looking in and they're using it at their own. So use a central bank. Different digital currency is backed by fiat currency.
Okay, so that's what you guys are.
And that is
okay.
We just study what we're not at risk. It's unless you have a lot of money to lose. Exactly.
Any other?
It's education.
I'm representing Kenji, Charity Education Network. Yeah. So in the event that okay.
No, that's not in our realm. Touch it with a 10-foot pole.
There for all the members that are here. The former Prime Minister once said that the banks would be able to process the funds that comes from the industry to pay the business class. So if it becomes an industry, how would the revenue collected be processed?
Clearly know your customer is an issue, right? And due diligence. You have to know source of funds, and so those are issues that have to be worked out.
Yeah, I just wanted so because I didn't really understand what the Prime Minister meant, so I wanted to get from a banker perspective.
It's a challenge. A big challenge.
And the last question.
Good question, though.
Hi, good morning. Thank you very much for that presentation. You gave us a lot of information, and I would very much like the opportunity to have a second look at the slides that you shared. I was literally trying to jot down some notes on some of the issues. I was particularly interested in the analysis that was done by the World Bank, you said, looking at what were some of the main factors or the main challenges, and I think you highlighted quite a number of them, looking at the fact that women tend to or persons tend to have better confidence in the informal sector than the formal. And you spoke about literacy and all of these wonderful things. And so without having the advantage of going through the Central Bank strategy, I was wondering what is the target, or is there a target set for reducing the participation in the informal sector? I know that one of the challenges that were highlighted had to do with the amount of documentation that is required. Yesterday, the banks spoke about how they're trying to deal with that, but from a regulatory perspective, how is there like a set target that you would want to achieve to sort of create, and I think it's a sort of follow-up to the question about trust, because all of these things are interrelated. So what is the strategy, the plan, the target towards reducing the participation in the informal sector?
Okay, I don't think I wouldn't have said that they have more confidence in the informal sector. It is that they use the informal sector. Right. And again, that goes back to several factors. Lack of documentation may be one. The ease of getting money from the informal sector may be another, right? But don't have transaction accounts in the formal sector is because they don't have the documentation needed to open an account. So, and that's why we're doing the simplified due diligence, so that you need less documentation in order to open an account, and then you have limits on what you do with that account. But what we are the underserved population basically need to be able to save and borrow. And so we want them to start with a lower transaction amount and then build up as they have a credit history and improve their own livelihoods. So you start with the basic transaction account, which needs less documentation and a shorter period. They tend to take long to open an account. So we want to reduce the period it takes to open the account and the documentation required to open the account, so that we encourage persons to participate in the formal sector. But culturally, we like syndicate and we like saving under the mattress. So it's a whole mindset that has to take individually. We have to change how we work.
Yeah, even when you were saying that, I was even thinking about some of those pyramid schemes that I think it was in 2018, 2019 that was really driving a lot of people to get into trouble.
Exactly. Yeah. So again, know the financial system, learn it, question it. Ask your financial institution questions, ask your educators questions.
Thank you so much for that. And will you be able to share your slides with us?
So we'll put it on the website if that's okay.
I just need to confirm.
Okay.
Once you confirm, then it will be available
Agreed.
at the end of the day. Yeah, for sure.
Just for everyone. Yeah, so all the resources are on the QR code from the previous days. So from us and the resources that were used. If there are no other questions, thank you so much, Dr. Craig, for your presentation. We truly learned a lot.
If any of them off, right, we're off. If anybody wants